Welcome to Stoxies. Today, I will present you with a concise but comprehensive analysis of PepsiCo, one of the largest multinationals in the food and beverage industry. We will look at its history and profile, its financial data, key financial indicators, the course of the stock and estimates for the future. Stay tuned until the end of the video and you will not regret it. Let's get started. PepsiCo is known worldwide not only for its soft drink Pepsi, but also for an extremely broad portfolio of products. Its most popular brands include Lay's, Doritos, Quaker, and many others. The company operates on almost every continent, with significant market shares in North and South America, Europe, the Middle East, and Asia. This international presence allows it to rely on multiple markets, thus limiting the risk arising from economic crises in specific countries. In its financial results for the second quarter of 2025, PepsiCo reported revenue of about $22.7 billion. This represents an increase of about 1% compared to last year. Despite the pressures, earnings per share reached $2.12, exceeding market expectations. This is a positive sign, as it shows that the company manages to remain profitable, even in difficult conditions. However, a closer look shows that organic growth is limited. Management is talking about low single-digit growth, which indicates that the market is almost saturated in many developed countries. At the same time, sales volumes are declining in some categories, especially in North America, due to increased prices and changes in consumer behavior. Another major issue is cost. PepsiCo is affected by increases in raw material prices, supply chain difficulties, and new tariffs imposed in several markets. In addition, foreign exchange fluctuations, namely changes in currency exchange rates, reduce profitability when international revenues are converted into dollars. As for the key financial indicators, the price-to-earnings ratio, known as PE, ranges around 25 to 26, which means that the stock is considered relatively expensive in relation to its earnings. The price-to-sales ratio is around 2.1, while the price-to-book ratio, known as price-to-book, exceeds 10. These figures show that investors place great value not only on the actual financial data, but also on the strength of the brand and the stability of the company. PepsiCo's profit margins are also indicative of its position. The net margin is around 10%, while the operating profit margin is around 15 to 19%. This means that the company has satisfactory profitability, but not as high as in more specialized industries. One of its biggest assets remains its policy towards shareholders. PepsiCo offers stable dividends and carries out share repurchases, which strengthens investor confidence. If we look at the course of the stock, we notice that in 2025 it has gone through difficulties. In some periods it fell, as the results did not excite the market, and investors were concerned about the increased costs. However, recent announcements that exceeded analysts' forecasts brought some recovery. The company's strategy to invest in healthier products is also interesting, such as the acquisition of the company Poppi, which is active in probiotic soft drinks. This is a move that shows adaptation to new consumer trends. Analyzing challenges and opportunities, we see two aspects. On the one hand, PepsiCo faces increased costs, intense competition, and pressures from consumers who choose cheaper products due to inflation. On the other hand, it has significant opportunities, can expand into healthy and functional food and beverage categories, invest in new markets with a growing middle class, and leverage the enormous power of its brands. The outlook for 2025 suggests that it will be a year of consolidation. No significant earnings increases are expected, but the company maintains a strategy that can deliver long-term results. The stock's performance will depend on whether it can improve its margins and increase sales volumes. If it can, then investors can expect positive returns over time. In conclusion, we can say that PepsiCo is not a company that promises spectacular growth. However, it is a stable giant with a huge international presence, strong brands, and a stable dividend policy. In a world full of uncertainties, this in itself is valuable. The challenge is to combine this stability with innovation and adaptation to new trends. If it succeeds, it will remain one of the top players in the field for many years to come. What do you think the future of PepsiCo will be? Write me your opinion in the comments. Thank you for following our analysis. Stay tuned to Stocksys to stay informed about the market.